Carl retired in 2024 making $180,000. 2 years later, a Medicare bill arrived charging him extra for a salary he no longer earned. He almost paid it without asking a single question. That bill ran $5,200 higher than it needed to be, and there's a specific form that could have erased it before it ever showed up. Today I'll show you exactly how that form works, why almost nobody files it, and what it saved Carl's neighbor Barbara the very same year. Here's the rule, straight, before we go any further. Medicare charges some people extra for Part B and Part D coverage based on income. That extra charge is called the Income-Related Monthly Adjustment Amount, EAR-mah for short. And here's the detail almost nobody explains clearly. Medicare doesn't look at what you earn this year. It looks at your tax return from 2 years ago. So if 2024 was your last full working year, the year before retirement dropped your income, Medicare is still charging you today as if you were earning that old salary. There is a fix for this, and it has existed for years. It's called Form SSA-44. It lets you tell Social Security directly, my income has changed because of a specific, recognized life event. Please use a more recent year instead of the outdated one. Here's the part that surprises almost everyone the first time they hear it. This form isn't hidden in fine print. It's a real one-page document, and Social Security is required to consider it. The problem isn't that the process is secret. The problem is that almost nobody knows it exists. Let me show you exactly what happened to Carl, and then what his neighbor Barbara did instead. Carl worked in commercial real estate for 31 years. In his final year before retiring, his salary plus bonus came to $180,000. He retired that December, moved on to Social Security and a modest pension, and his household income dropped to about $62,000 a year. 2 years later, his Medicare bill arrived. Instead of the standard Part B premium, he was in EAR-mah Tier 3, an extra $370 a month. For a full year, that's $4,440 in extra charges for him alone. Quick note, this is education, not personalized advice. Talk to a licensed specialist before deciding. Carl assumed this was just how Medicare worked now. He paid the higher premium for months without asking a single question, because nobody had told him there was a form for exactly this situation. Now here's Barbara. She worked alongside Carl for years. Different department, same company, similar salary. She also retired in 2024. But before her first IRMAA bill arrived, Barbara asked her financial advisor one question. Does Medicare know I retired? That question led her to Form SSA-44. She filed it within 6 weeks of retiring, listing work stoppage as her qualifying event, with a letter from her employer confirming her last day. Social Security reviewed her 2025 income instead of her old salary, and her extra charge disappeared before her first bill ever arrived. Let's talk about exactly which life events qualify, because this form isn't for everyone, and using the wrong reason can get your request denied. Social Security recognizes a specific list: retirement or reduced work hours, marriage, divorce, death of a spouse, loss of income-producing property, loss of a pension, and an employer settlement payment that inflated 1 year's income. Retirement is by far the most common reason people use this form, exactly what applied to both Carl and Barbara. Here's the part that trips people up. You can't just say your income went down. You have to point to one specific event, and you generally need documentation. A letter from your employer, a pension statement, a divorce decree, something that proves the event actually happened. Once approved, Social Security recalculates your EAR-mah using your more recent estimated income instead of the 2-year-old tax return. If your estimate is close to accurate, your premium adjusts going forward. In some cases, if you already overpaid, you can receive a refund. Let's put real numbers on this, because the dollar difference is the whole point. In 2026, the standard Part B premium runs around $185 a month. EAR-mah Tier 1 adds roughly $70. Tier 2 adds around $175. Tier 3, where Carl landed, adds about $370 a month. Tier 4 and Tier 5 go even higher. There's also a separate Part D extra charge, calculated using the same income brackets. If your SSA-44 request is approved, it corrects both charges at once. Here's the number that should stop you if you're anywhere close to retirement. Carl's extra charge alone came to $4,440 in a single year. Multiply that by a married couple, both on Medicare, and you're looking at nearly $9,000 for income neither of them earned anymore. Carl eventually found out about the form 5 months into paying the higher rate. He filed late, but Social Security still reviewed his case using his updated income. His premium dropped going forward, though he never recovered the 5 months he'd already overpaid. That's the piece worth remembering. Filing earlier doesn't just change your premium sooner, it can mean the difference between a refund and money you simply never get back. Now here's an exception that changes the math even further. If your income spike was voluntary, a large Roth conversion, or selling an investment property, that generally does not qualify. The form exists for life circumstances that happen to you, not financial moves you chose to make. This is why timing matters so much within 2 years of Medicare enrollment. Here's something else almost nobody checks. Your EAR-mah letter tells you whether you have appeal rights, but it doesn't explain which life events qualify or walk you through the paperwork. You have to go looking for that information yourself or already know to ask. So how do you actually file it? You can download Form SSA-44 directly from Social Security's website or request it by calling their national number. You'll need to state which qualifying event applies, provide your estimate of this year's income, and include documentation proving the event happened. Here's a detail that surprises people who've already been paying an inflated premium for months, like Carl was. There is no strict deadline to file this form. You can submit it anytime your circumstances change. The sooner you file, the sooner the correction applies, but late is still far better than never. Let's walk through exactly who should be thinking about this form right now. If you retired within the last 2 years and your income dropped significantly, check your most recent Medicare premium notice for an EAR-mah adjustment. If you're planning to retire in the next 12 months, mark your calendar to file this form within weeks of your last paycheck. Don't wait for the bill to arrive first. If you're a surviving spouse and your household income just dropped because of a death, that qualifies too, and it's one of the most overlooked uses of this form. And if you're currently paying an EAR-mah extra charge and you're not sure why, call Social Security and ask them directly which income year they used. If it's based on income you no longer earn, you may already qualify for a correction. Barbara's case took about 6 weeks from filing to approval. Carl's took slightly longer because his paperwork was incomplete on the first attempt. He'd forgotten to include a signed letter from his former employer confirming his retirement date. That's the most common reason these requests get delayed. Missing documentation, not a complicated process. Now, I want to be clear about something. This form does not eliminate EAR-mah for everyone. If your current income genuinely puts you in a higher bracket, even after retirement, the extra charge still applies, and rightly so. This isn't a loophole. It's a correction for outdated information. Here's something that catches people off guard. Even a small overshoot into the next bracket costs you the entire jump, not a partial amount. Medicare's EAR-mah brackets work like a cliff, not a slope. $1 over the threshold, and you owe the entire next tier's extra charge for the whole year. This is exactly why the 2-year-old income figure matters so much. A single high-earning year, even one you'll never repeat, can trigger a full tier of extra charges 2 years later. If Social Security denies your SSA-44 request, you're not out of options. You can request a reconsideration, and if that's denied too, you can appeal to an administrative law judge. Most denials happen because the qualifying event wasn't clearly documented, not because the request itself was invalid. Here's the mistake I see most often. People call Social Security, get told no by one representative, and give up. If your documentation is solid and your event genuinely qualifies, don't stop at the first denial. Let's bring this back to Carl and Barbara one more time because their story is really the whole lesson. Same company, same retirement year, nearly identical drop in income. Barbara asked one question before her first bill arrived and paid the standard rate from day one. Carl assumed the bill was correct, paid the higher rate for 5 months, and only recovered going forward, not retroactively. The form did the same thing for both of them, eventually. The only difference was timing, and that timing difference cost Carl real money he never gets back. This isn't a rare situation. Every year, hundreds of thousands of people retire, and their income drops the following year in exactly this pattern. Most of them never file this form because the EAR-mah letter that arrives in the mail explains the charge, but never mentions the fix. If you take away exactly one thing from this video, let it be this: an IRMAA bill based on a job you don't have anymore is not automatically correct, and it is not automatically permanent. Let's go through it one final time, step by step, so you know exactly what to do if this applies to you. Step 1. Check your Medicare premium notice for an EAR-mah adjustment. Step 2. If your income dropped because of retirement, reduced hours, divorce, death of a spouse, or loss of a pension, download Form SSA-44. Step 3. Gather documentation proving the event. Step 4. File the form as soon as possible with your income estimate. Step 5. If denied, request a reconsideration rather than accepting the first answer. Quick reminder on numbers: EAR-mah thresholds and premium amounts adjust every year, so before you file, confirm the current 2026 figures directly with Medicare or Social Security. Carl's $5,200 mistake wasn't about being careless, it was about not knowing a form existed. That's really the pattern behind almost every Medicare and Social Security mistake we cover on this channel. Not carelessness, just missing information at the exact moment it mattered. So here's the one thing to remember: if your Medicare bill reflects income you no longer earn, Form SSA-44 may fix it. In the next video, I'll show you what happens to that same EAR-mah bracket when a spouse passes away and why the surviving spouse's threshold cuts in half overnight.